This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more. Welcome back to 30 Deals in 30 Days. It is technically day 2. And I know that it's day 3. It's technically day 2. For whatever reason, I was unable to go live with you guys yesterday. I was actually at day 2 rides again. Ironwood, what's going on, man? You know, it's funny. I was 20 minutes into recording that live stream and analyzing this deal. I was doing it from my laptop, which normally you guys know I'm here in my studio, but I was doing it from my laptop. And so I couldn't see the comments. And I was like, you know, we're 20 minutes in. I bet there's going to be some questions about what we've got going on right now. Let's go ahead and check on those. And everybody was saying, oh, I guess the live stream is not happening today. So sorry, guys, for I don't know what happened. I mean, it said that we were live on my end. So I really have no clue as to what was going on. But we're still going to be doing this 30 times in 30 days. So that means I will be doing it twice for you guys on Sunday. So Sunday, we're going to get a day 4 and a day 5. We'll be diving into it, which is, hey, we're going to make the best out of it. Okay, let's look at this real quick. We're going to be diving in today to a deal in Kalamazoo. Robert Moyle, one of the guys that joined the challenge for 30 Deals, 30 Days. By the way, if you want to get access to the spreadsheet, you want to get access to training on how to underwrite better while we're going through this, join the 30 Deals, 30 Days challenge. It is CREcentral.com/30 Deals, 30 Days. It's all one word, all lowercase, and it's the numbers, 30 Deals, 30 Days. I'm going to drop that in the chat as well so that you guys have that. Real Deal is saying, it's okay. We're here now. I appreciate it, guys. Thank you all for being patient with me. This is going to be a fun one. The other night was great. Chris is here in Nashville. We've got our mastermind going on. I was very excited to be able to get to do that with him. I actually ran over here from our party. We're having a party for all of the members of the mastermind over at Salt Ranch right now to jump on. I looked at Chris. I was like, oh, no, what time is it? He was like, it's 6:52. Like, okay, time for me to run back to the studio and go live. So without further ado, let's dive into today's deal. As you guys have questions, drop those in the live chat. You know what this is for. It's so that you guys can learn, right? It's not for me to just hear myself talk, all right? Trading for Science is saying, how much for the mastermind? I can't answer that question anymore because I have answered it on this podcast before, and then somebody found the price like a year later and then got pissed at me because they were like, well, I heard on the podcast that it was X. I was like, well, I don't know what to tell you. We raised our price in May. It is, I do have an online course. That's $1,000. You can go buy the course anytime. It's always going to be $1,000. It'll always be there. It's called The Beginner's Guide to Commercial Real Estate Investing. The mastermind, it's not cheap, but it's a lot more affordable than other masterminds I have seen out there. So let me just say this. It is as low of a 5-figure investment as you could have at the moment, right? We'll just keep it there. All right. Okay, so this deal that we are looking at is up in Kalamazoo. It's 2 properties offered at $850,000. Now, when I look at this, it looks like it's technically one building, right? So it's about 10,278. I was like, I underwrote this thing last night. I should know how much it's, what it's priced at. Sits on about 1.5 acres, was built in the 50s. And looking at these pictures, it looks like it's barely been renovated since the 50s, all right? It says, like, what, Hoekstra's, which is a very, like, you know, Michigan, Minnesota, like northern Midwestern name, right? What is that, Polish maybe? I don't know. But not a very common name for you to hear down in the South, all right? But looking at this building, let's see. I don't know how to zoom in on a Mac. So, sorry, guys. I'm not going to be able to zoom in on it, but you can see it. Little things like this, see how there's rust coming down on the side of the building? I don't like seeing that. If we go back over to this picture over here, you see the paint's chipping off. That's not a big deal. The sign's a little broken. I was able to actually zoom in on these windows yesterday, and it looks like there's just a bunch of junk inside. There's something that's fallen off, like maybe some sort of skim coating on the brick that has fallen off here. So just looking at it from an initial glance, I'm like, okay, this is probably going to need a lot of work. Like if the outside looks like that, there's no telling what the inside. Okay, he's saying Command Plus. Oh, look at that. Wait, no, we need to go Command Minus. No. It's zooming in on all the wrong stuff. All right, sorry. Hey, we're doing this live. We're live, so it's part of it. I appreciated Ironwood. That would have been really helpful. It works. I don't know why it's zooming in on the text instead of the photo. Anyway, looking at this, I'm like, this parking lot's a little worn out. It's a little tired. It's not surprising to see this up north, right? One thing that you have to consider is that up north, you've got a lot of extreme weather, right? It gets really, really cold. And so of course stuff's going to be breaking off the building. And of course, you're going to have things that are rusting kind of on the side because that water's getting in there. And then it's doing some damage. But when I look at these windows here and I look at this property, it just seems to me like it's probably been vacant for a while. So, those are all things that I start to notice when I'm looking at a building. It's like, okay, if there's rust on the side, this is a really cool facade. Like, if you fix this up, man, that's kind of badass. This just needs to be patched up a little bit, but you give it a little TLC, it's probably not going to take a lot to get this back to where it could really, really look good. The problem is, if somebody has allowed this much deferred maintenance to occur on the exterior of the building, it's probably worse on the inside where people are actually using it all the time. All right. So I remember from looking at this last night, like there's basically two different spaces as it sits right now. There's almost no information on this listing. So I'm like, there's probably a reason that this has been sitting here. Let's see, how long has this been on the market? Maybe it'll say like last updated. Date on market was September 16th. Okay, so not that long. Last updated September 16th. Okay, so they just got a couple of pictures and said, all right, let's throw this up and see if anybody is interested in it. At $850,000, come on. It's a good price. You break that out on a price per square foot. What are we looking at here? $850 divided by 10,000. Of course, I'm going to forget. 10,278. We're looking at $82 a foot. Like right off the bat, I love that. I love anything under $100 a foot because I know generally what it's going to cost me to renovate things. So like if I can get something under $100 a foot, it'd be pretty sweet. Let's see. Trading for Science is saying, can you do a good deal example for 100% seller financing? Yeah, we can even look at that on this deal, to be honest with you. G and Trading are saying more things about, okay. Yeah, just thank you guys. I appreciate it. Unfortunately, I don't have a trackpad. That'd be really easy to just zoom in. The price per square foot's right there. You guys can tell how often I'm looking at LoopNet. It's not very often. So let's do this. Let's take this address and go look at it on Google Maps and see what we're looking at here. Now, keep in mind, you guys, I've never, aside from last night, I've never looked at this deal before. I've never bought anything in the Kalamazoo market. So everything that I'm doing here is exactly what I would actually normally be doing to try and familiarize myself with the market. So just follow me. Let's do this. What in the world? I have a feeling this building might not be available anymore. Look at that. That is a night and day different building. Oh my gosh. I actually didn't look at this last night. So I'm looking at it now. I'm like, all right, well, they got a hell of a tenant in there selling a bunch of weed and I guess making good enough money to make that exterior facade look good. But what's funny is they left all of this. Well, they took down the really cool Hoekstra sign. That's too bad. That would have been like a really neat just memento to have on that property. Interesting. Well, I wonder what's going on with it now. I am going to, just for tonight's purposes, because I know you guys love some value add deals, I'm going to pretend like this isn't the case with this building, and that we're going to assume it's still vacant according to the, yeah, I mean, they're still trying to lease 8,200 square feet. So that pot tenant's only taking up, yeah, maybe I'm taking some pot shots at them. It looks like they're only taking up about 2,000 square feet, give or take. So not a huge tenant, but man, did they spend some money making this look good. So good for them. Okay, anyway, we're going to pretend like we didn't see that because that doesn't make any sense. You'll come across this pretty often as a commercial real estate investor. For whatever reason, in the world of commercial real estate, most brokers are actually horrific at marketing. I don't understand it. I think that they just think that they're in general sales jobs and that they don't need to be good at marketing, but that makes absolutely zero sense. If you really want to sell the hell out of this building, tell me the story. Share the dream. What's the dream of the property? For this to have been posted 2 months ago, and then clearly this tenant or last month, this tenant has come in and redone it. Either they posted old photos or maybe it's a scam. I don't know what's going on here. Actually, let's see if the agent's name is the same on here. Midwest Realty Group. No. Oh, interesting. So it's not even the same broker on that sign. There's a different sign right here. Let's see if that's any different. Nope. Midwest. Okay, interesting. Maybe the person whose listing we're looking at doesn't even actually have the listing. All right, let's do this. Let's go to Crexie because Crexie has better demographic data I have found, or just insights, honestly, into an area. We're going to look at Kalamazoo. Okay. I don't need that. Look at Kalamazoo. That's a fun word to spell. So this is what I found last night when I was looking at it. When I initially looked at it on Google Maps, I didn't get to street level. It's somewhere over here. So it's like right next to the hospital. There's this giant park over here. So like, cool, this is a pretty great little area for this building to be in, especially for a flex-ish retail building like that. So I was like, okay, well, let's see what we can do here. Now, what I'm going to do is I'm going to break it down by property types. I think that we could put retail in here. I think that we could probably put some office in there. And you could definitely do industrial. I mean, not refrigerated, not manufacturing, not R&D. We could do medical office. Not an auto shop. Probably a bar, maybe a restaurant, maybe pharmacy, grocery store. Not a gas station. Probably no QSR or fast food. No daycare, nursery. That's just hyper and no convenience. Okay, we can do a bank here. All right, so now it's going to give us, no, I don't want to see that. Now it's going to give us what's going on in the area. Why is this $1? Okay, now I'm going to set a minimum price of $10,000. Let's do 100, just to be realistic here. Max $1.5 million. Let's see what else, and I'm going to exclude unpriced listings. Let's see what else is in this area in our price range. Because, I mean, if we're looking at an $850,000 building, I want to know what else is available for $850,000. I exclude unpriced listings because I am a staunch believer that if you are unable to price your own property, that I shouldn't be your appraiser. And I'm not going to do all the work for you. So if you are serious about selling your property, you'll put a damn price on it and tell me what I should be looking at. Let's see. A first floor plus basement for sale. So a condo for $224. Office. Okay, it looks like another condo in that building for $400. Looks like you can get a whole building for $935. That's kind of a nicer looking building. That's interesting. We might, oh, look at that. This agent knows what they're doing. 63 photos. Tell me you know how to show off a property without telling me you know how to show off a property. Dover Birch and Associates, well done. Well done. I bet if we looked at that listing, it's going to be fully filled out too. I mean, It's amazing. The bar is so low for commercial real estate brokers. I could say that because I am one. I see this all the time. They're horrific. Robert's in the live chat. What's up, Robert? Thanks for joining us, man. He's saying, I didn't use Google Maps to view the area. I just used the maps in LoopNet. Lesson learned. Hey, you know what? If that's the only thing that you take away from the next 30 days, you'll learn something. I'm glad you're here, man. But that doesn't preclude us from going through this and practicing as if this was possibly a deal. Trading for sides, saying $1, I'll take it. I'll offer them 50% more than you, man. I'll give them $1.50. Let's make this a bidding war. All right. So that gives me a pretty good idea of everything else that's going on in the area, right? Let's look at the insights. This is one thing that I really like about like Crexy and how they do it. I can just go over to the insights whenever I'm looking at these assets and get a pretty good idea about everything that's on the screen. Like it just pulls up all the data for this selected map area, which I think is pretty cool. So median asking price is $400,000. So this building that we're looking at is twice the median asking price. And the median square footage is 4,600. So I know right off the bat, we're priced a little bit higher than average, right? Because if I double 4,600 square feet, that's going to give me roughly 9,200 square feet. So 1,000 square feet less for 800,000. That would be the median, right? And we're priced at 850. So I don't know. Actually, you know what? We're probably not too far off. That's actually probably a decent-ish price. Let's see, price per square foot, $85. Okay, so we're at, what did I say, 87? 82. Okay, we're priced below market. A little bit. I like that. Not substantially so. This is always funny to me, like cap rate. You know, you guys know that I am, I don't know, maybe you don't know this. I am not a big believer in cap rates. I think the cap rates are more often than not a bunch of BS. Unless you're buying like a single tenant net lease deal, like a Walgreens or a Starbucks or, you know, a Take 5 Oil. We've sold a lot of those. You know, to me, like a cap rate, of course you want to look at it, right? It's one measure of a deal. It is not the end all be all. So, I mean, let me say this. It's like checking the weather. If you check the weather and it says 75 degrees today, you're gonna be like, wow, it's pretty nice. I mean, you know, unless you're in Celsius, in which case you're probably not going to feel that way. But 75 in Fahrenheit. All right. So I've been running and gunning all day. So you guys just get to deal with my personality today. I am tired. It's been great. Okay. 75 degrees Celsius, but you don't know, if it's raining outside or not. Right. So like having a cap rate on a deal will give you an idea, but it's not going to paint the entire picture. So I don't want you guys to think, that it will. All right. Rick is saying the link shows interior photos of the property. All right, let me go back. See, I'm only seeing 3 photos here, Rick. One exterior, and then the map. So I'm not seeing anything. I don't know. Maybe drop the link in the live chat. Maybe there's another link that you got. Would happily take a look at it. Okay, median year built 1935. So I'm not too concerned that this was built in 1910 to 1955. That seems pretty average. Ooh, days on market 326. We don't like that. Takes you almost a year. Well, okay, look at this. There's an outlier. I mean, that is median though. So I guess, you know, even if this is an outlier, it shouldn't really necessarily be taking it into account. Rick, I'm not seeing, you said a link that you attached. I don't know what, I'm sorry, Rick. I don't know what you're talking about, man. 1,549 days, you know, it's just not, as such an outlier. Can you imagine you drop the Berkshire Hathaway link? I don't know. Sorry, Rick. I don't know, for whatever reason, the Berkshire Hathaway link is not showing up in the live chat. I don't know if it's being like marked out or what, but I can't see it. So 326 days on market. That's fine. Typically 4 units, price per unit, $275K. Okay. So that's because there's condos there. So right off the bat, I kind of know we're about in the asking range for what these deals, should be. So that's not terrible. Let's go and look at the for lease in this area. Let's see what's going on over here. Get an idea of this. And guys, this is my exact approach. Like, this is exactly how I try and wrap my mind around a market, right? Because I don't necessarily need to know the demographics right now. I mean, we'll look at that here in a bit, but I don't need to know that at the moment. And I'll show you how I look at that. So asking rate, we always do this in annual because I'm not from California. $18 a square foot. Okay. So I know right off the bat that, actually, I don't know anything right off the bat. So $18 a square foot. Is that full service? Is that triple net? If it's triple net, man, we're going to crush it on this deal. If it's full service, we're probably not going to be making that much money. We still could. Days on market for lease, 301. So that's, 7 days better than days on market for buildings that are selling? That's not really great. Square footage available, median is 2,200 square feet. Look at how much is available under 2,000. They got a ton of stuff under 2,000. So that's a little concerning. But you know what? This is all types. Let me get back to retail, industrial, and office. Let me get rid of refrigerated and cold storage. We're not doing manufacturing. We're not doing R&D. Let's make sure that we're comparing apples to apples here. All right. Okay, still a substantial amount of space available under 2,000 square feet. So what that says to me is that there is a glut of space available in that 2,000 square foot range or less. So if we bring anything that's 2,000 square feet or less, it's probably, it may just sit there forever. It may never lease up. So it's impossible to know this just from looking at this deal online, but what I would do here is I would start calling brokers in that market and getting an idea for what's driving leasing in that market, if anything. There might be nothing driving leasing. These brokers might say, actually, we haven't signed a lease in a year, right? Which is unfortunately very possible. And some things that could be driving that, maybe there's just not a lot of business happening in Kalamazoo. Maybe they have a negative population growth, which would be pretty bad. I don't look at demographics too often, but a metric that I will immediately decide for a reason why to never invest in an area, not never, but probably not today, is negative population growth. If the population is declining, that means something bad is happening in that city, and over time, it's just going to get worse and worse and worse. And so I don't want to invest in an area where you've got a decline. I want to go somewhere that is growing. That's why the Southeast is so popular right now. You have so many people moving to the Southeast. It's growing. You've got to accommodate them. If people start moving, back out west to California, I'll be one of the first to jump on the California train, right? So, all right, we've got a pretty good idea. I'm going to say that we could probably lease this for $18 a foot. I'm going to go for office space. It seems to me like you might be able to get retail on 2,000 square feet of it. And then the other one looked like it was like 2 stories. You know what? Let's take that back. If that one building is 2 stories, let me pull this up so we can look at it together. This is 2 stories. We'll get ground floor retail here. That could even be like a really cool bar, actually. Like, come on. That's a dive bar. That is begging to be a dive bar. And it would be such a cool one at that. Throw a pool table in there and like one light, Okay. Upper floor up here, that's going to be office space. You're not going to want to convert that into apartments unless it's already apartments, and we don't know what it is. It would be very expensive to turn that into apartments. So I'm just going to assume we have 4,000. Let me write this down so I don't forget. We've got 4,000 square feet of office, right? 4,000 is 8,000. And then 2,000 square feet. Okay. So 4K office and then 6K retail. All right. So I'm just going to assume that I'm going to get $18 a foot, full service for the office. It's office space. That's typically what you will see. And so, yeah, I mean, a doctor's office would be great. Yeah. I mean, if you could do a doctor's office there, you might need an elevator. That's the only problem. I think medical office could do really well. I mean, you're basically like 2 blocks away. So yeah, trading for science. That's a great idea. And then 6,000 square feet of retail. That could be a doctor's office as well. Like, just because it's retail doesn't mean that it's not capable of being a doctor's office. Like, that could very easily be like a family practitioner or something to that extent. I'm going to assume on that we'll get $18 a foot triple net. All right. And I'll show you guys how I would actually blend that together in this deal, in the underwriting spreadsheet. We're making assumptions here. Like, I want to be very clear about that. That is what underwriting is. It's making assumptions. What you want to do to make sure that you're making the best assumptions possible is to get all of the data possible. So if this was actually a deal that I was interested in doing, the first thing that I would be doing is calling brokers, calling property managers, and making sure that I knew exactly how much retail, like ground floor retail in this area would lease for and what's leasing. Is it 6,000 square feet? Like, should I just lease all of this to one person? Is it 2,000 square feet? Anything less than that, it seems like we've got a lot of space available on the market. And I would want to ask those brokers, why is there so much space available that's under 2,000 square feet, right? I want to know why. You know, I tell the members of our mastermind, I'm like, you are an FBI agent. You have to investigate everything. Ask every question. Everything that comes up, ask why, right? All right, this building is vacant. Why? This owner wants to sell. Why? Retail won't do well in this area. Why? You know, retail is leasing for $18 a foot, triple net in this area. Why? Everything is why. You have to understand why. I know I've just said why like 17 times in the last 30 seconds, but I really want to get that point across. You have to ask that question. All right, let's jump into our spreadsheet now and take a look at this. So we said we've got 10,278 square feet. And you know what? I'm going to zoom in on this a little bit so that you guys can see this better. All right, there we go. Purchase price, they're asking $850,000. I'm going to drop it in at $850,000 for our first blush of underwriting, and then I'll pull it back. Hold on one second, guys. My fiance has called me twice. I want to make sure it's not an emergency. Hey, I'm on a live stream right now. Is everything okay? No, I don't. Okay. All right. Bye. Somebody locked the bathroom doors at Salt Ranch. All right. Everything's fine. So, okay, capitalized rehab. I'm going to assume that we're basically at a shell of a space on the interior, and it's got to be completely renovated. So it's probably going to cost me another $850,000, right? $83 a foot. Now, again, if I wanted to make sure that that capitalized rehab number was accurate, that was right, then I would be diving in and talking to contractors and making sure that that number is actually pretty accurate, right? And I would go through, I would get plans and really have something that they can actually bid. Sorry, I'm texting her and letting her know that the bathroom should be open and working in the actual rooms. I would actually go through and get a true bid from a contractor based off of plans. So I know you're going to have to spend money on architectural plans. Well, I don't know if I should spend that on a deal that I don't know about I'm buying yet. Exactly. That's why we're making an assumption here. All right. The more you do these deals, the more you work with contractors, the more you look at construction, the better you're going to feel about the assumptions that you are making. All right. But at the end of the day, they're still assumptions. All right. Closing costs. I like to keep these closer to about 2%, give or take. That's typically what I see it's going to run you, especially if you're raising capital and spending money on some legal fees. This operating capital is going to populate based off of, it's going to automatically populate. By the way, if you're downloading these spreadsheets, you fill in the blue tabs, you don't touch the white tabs. All right. The white tabs are all They are all formulas. So you can see this formula right here. All right. It's calculating basically how much of a shortfall you're going to have before you have enough cash flow to cover all of your expenses. Right. And it tells you you've got to bring that to the table. So your total for closing is $324,000 if we only had to bring down 10%. If we're getting a traditional bank loan, I'm going to feel better at 25%. But if we're able to do 100% seller financing, I'll show you guys here in a minute what that's going to look like. All right. I feel pretty confident in being able to get 6.5% on my interest rate, but I would say we're probably going to be closer to a 20-year amortization if we're being realistic. All right. So that means I've got to bring $561,000 down to do this project for $1.7 million. All right. Now, let me zoom out because you guys are not going to be this zoomed in on the spreadsheet when you see it. There are tabs over here that go into what each of these is. I have done this for so long. I know what all of these are. So I'm just going to call them out as we're going through it. And hopefully you guys are utilizing these spreadsheets and getting more familiar with them because that's how you'll be able to underwrite deals really, really, really fast. So I'm going to assume that we're able to get $18 a foot full service. Okay, so we're going to be able to get $18 a foot across the board, right? And I told you guys we're getting $18 a foot for the office. We're getting $18 a foot for the retail. Now, what I would say is, the retail, it's going to be triple net, right? They're paying their common area maintenance, property taxes, and building insurance. With the office, we've got to gross everything up, right? So we're paying their pro rata share of the CAM, their pro rata share of utilities, all of that kind of stuff, okay? So I'll show you how we do that here in a minute. All right, typically I come over here to the vacancy rate afterwards. I like 100% year one. It's probably going to take us a lot of work to get this going. Let's say that I feel pretty confident that we'll have about 3 total months of vacancy. I don't know. Actually, looking at 300 something days on market, I'm going to say we might have 6 months of vacancy in year 2, even after we're done, and then we'll stabilize it around 7%. Take it from there. Now, if I wanted to get really honed in on my true vacancy, Trading for Sides is saying, take a shot every time he says why. You guys are going to be schmammered. You're not even going to learn how to underwrite if we do that. I love it. Okay. So as we're going through this, what I would do, again, if I was really looking into buying this deal, and I'm not going through these steps because obviously we can't live stream for just like the next 7 days straight. It would get weird with you guys watching me sleep. But I would actually start calling property management companies and figuring out what is the vacancy rate in the area, right? What is the true vacancy rate? Same with brokers, right? They'll probably have all that information. Operating expenses. So what I'm going to do is I'm going to say for typical office space in that market, you know what? Let's go look at some for sale office buildings and see if we can get an offering memorandum that shows us what the expenses are on office buildings in Kalamazoo. So we're going to do office. We'll do any cap rate, save search, apply. You know what? Let's throw a cap rate on there because just by doing that, we're almost guaranteed to have legitimate offering memorandums. Wow, literally nothing. Okay, that is not helpful. All right, we got 1. Let's see if it's got an OM. Well, now urgent care. I guarantee this is triple net. Yeah, double net plus. Okay. That's not going to work for me. Let's try that. Okay, we'll pull up some more. This is like a very true office building. Let's see, traditional office. So what I'm looking for here now is a flyer that is going to have the operating expenses on it. If you're selling a legitimate investment, that is something that you will typically have. All right. So if there is a true like, hey, this is a multi-tenant deal, and maybe that's what I need to do. Like, let's set it to multi-tenant. Multi. Minimum occupancy 4%. I want to see that something's in there. Okay, takes us down to 2 listings. Okay, look at this building. This is a little bit more intense than what we're going to be doing, but it's still going to give me a good idea of what the expenses per square foot are in that area. So let's see if they actually have it. Oh, man, that's brutal. Occupancy 30%. Whew. Man, office in some markets has just gotten absolutely crushed. Man, nobody actually has a real flyer attached to this. I wonder if, I wonder why that's happening. All right, let's go back to LoopNet. Let's see if the properties here do, because it's very easy to find the links here. For sale, filters. All right, multiple tenant. Search for that. Don't want any industrial, we just want office. Okay, let's see what we've got going on here. Investment or owner user. We don't want that because that means it's vacant. Okay, let's try this. 4.1 million, 129,000 square feet, 88% leased. All right, this is a legitimate investment sale. Have an OM. Ah, killing me. There's no OM. Let's see if there's anything. Nah, just additional details. Okay. We're live, guys. You guys get to go along for the journey with me. This is exactly how I'd be doing it, going through each of these and trying to find what those operating expenses are. Because there has to be an offering memorandum somewhere. I'll tell you that. Look at that. See, it should be front and center like this. Okay, 426,000 square feet. I don't know, this would be a fun deal to buy. All right, OpEx. What a cool campus. No financials. No financials at all. Not even a pro forma. You would think that they would at least have a pro forma. Maybe office is just performing so poorly in this area that nobody even wants to put a pro forma together because it just looks bad. Okay, we're going to make the assumption that it's $7 a foot. I'm just going to throw that out there. $7 a foot for expenses. Again, I'd be calling property managers and brokers to actually confirm what this number would be. So we're going to be paying $7 a foot on 40% of the space, right? So remember, we've got 4,000 square feet of office, 6,000 square feet of retail, which means that for 40% of the space, we're responsible for paying $7 a foot, but we're running this over the entire square footage. So I'm going to take that 40%, 0.4, and I'm going to multiply it times $7 a foot. That gives us $2.80 a foot. So that is what my expenses are going to be once I'm stabilized. All right. I'll have this increasing at 103%. That just basically means 3% annual increases. Leasing commissions, I'll say 6%. We're going to pay market rates for that. And then right off the bat, my debt service coverage ratio in year 3 is 1.33. That looks pretty good. All right. I like that. Principal reduction, I'm going to assume this box is red, by the way, because I deleted this in our live stream on Tuesday with Chris. It's the same spreadsheet. This is why I marked it red. Look at that. There's no formula in that anymore, but it's a white box. There's supposed to be a formula in it. All right. So this, what I would do if I wanted to add this back would just do equals and come back in here to this one. It's the same thing. Right. And then I would actually unmark this as red because now the formula is working again. But I'm going to leave it there because I want 12 months interest only. I think I should get it. This property is going to take a lot of work. Mortgage interest, that's fine. I'm going to keep the capital reserves at 35 cents a square foot. That makes sense to me. 2% asset management fee. We'll keep that rolling. Reallocation is basically if I'm raising capital from investors for this, I'm taking 20% as a general partner. All right. So we'll leave that in. First year, we're losing a lot of money. All right. That's because we are under construction. We're paying for expenses and nobody's reimbursing us for anything. All right. Now I would probably, since it's, this is not going to be taken into account us paying 100% of those expenses for the first year. Because remember, we prorated that. So we're only, in our operating expenses, we only have the share that the office would be paying. I would probably go in and add more to this. All right. But it looks like year 3, 4, and 5, we cash flow a little bit to our investors, 4, 5, 5.5%, not terrible. I think that this would probably sell for a 7.5% cap rate once it's stabilized. And let's see what we're looking at in terms of return. Okay, not good. Overall return, 35% over a 5-year period. That's essentially 7% per year. Not worth my time. I'm not getting out of bed for that. For 7%, I'm just investing in the stock market. I might even buy treasury bonds at 5% or whatever the hell they are. That's a 9.37% internal rate of return. Basically what that's saying is your time value of money is 9% per year. Not really great. All right. I'm not excited about that. So let's go back up here and let's see what we can mess with. Well, let's just say that we got the building for $750,000. $73 a foot. We got a little discount. I can't touch my operating capital because I know, right? We're losing money that first year. We have to bring money to the table. We've got to bring $528,000 down. I don't think that I can mess with my terms anymore. Maybe I can push it to 20%, but I would have to talk to a lender and feel very comfortable with that. Maybe I'm able to get my vacancy filled faster, but I don't know. That's based on like market comps, right? I mean, I wouldn't feel like I know we're going to be vacant 100% for the first year. And then if I'm putting all these spaces on the market, even if I'm a total badass, even if the Cauble Group is able to go up to Kalamazoo and market this for lease, I have a great team. Then, I still don't think that we're going to beat the market that much, right? There's it does depend on the brokerage team that you get, but at the same time, the market's the market. Like it doesn't matter how great of a broker you are. If you're in the worst market, nobody's going to lease from you. So I would want to figure that out. Like that median days on market, like over 300. What's the reasoning for that? What's going on here? We get to a high debt service coverage ratio, but we're not netting a lot. So I wonder what is happening here. Principal reduction. So total non-operating expenses, $114,000. Property cash flows $37,000. That makes sense. Okay. Nothing's really like I always go through these and I look for like anomalies in the spreadsheet. What looks out of place that shouldn't? I'm not seeing anything. There's nothing here that looks crazy, right? Okay, so we dropped the price down to $750. Now we're looking at about 50% returns. I still wouldn't get out of bed for this. I like to see 100% over 5 years. That means every 5 years I'm doubling my money if I'm increasing by 100%, right? So, typically an IRR ends up being about 18 to 22% for my deals. So I would say, I don't know, it's not exciting for me. Now, let's assume that this person is going to let us sell or finance it 100%. Here's the problem. I have $850,000 of capitalized rehab. So first off, I'll tell you this deal doesn't seem to work, right? I've stress tested it a little bit. I don't think that I can actually move any numbers. I'm not moving my rent. Like I feel that my rent is within market. I don't think that just because this is a deal that I'm doing, that I'm necessarily going to be able to charge more in rent or that I'm going to be able to lease it up faster than everybody else. When I underwrite conservatively, not aggressively. I don't want to do all of my spreadsheets with the hopes of what we can achieve. I want to say, hey, if we're not any better than anybody else, does this deal still work? All right. So the problem is if I'm able to go and negotiate seller financing, let's say they give us, we agree to their purchase price, $850,000. And they're going to seller finance 100% of that. Now I've got to put $850,000 in my non-capitalized rehab, which means that I have to bring that out of pocket. So now I'm having to bring $1,149,000 to the table, which before, let me undo this real quick, I was bringing $558,000. So I'm having to bring twice the amount of money down. So seller financing in a situation like this actually would not work. Seller financing would work in a situation where maybe you've got like $100,000 of rehab and, you know, you've got that, or you've got a partner that could bring that to the table. So what I will say is, who is it? Robert that brought this one. Robert, I wouldn't buy this deal. I don't think it's a good deal. But with the caveat that I would still be calling brokers, I would still be calling property managers if I was actually interested in investing in the Kalamazoo market. There's a lot of unknowns that we still haven't solved going through this process today. So there you have it for day 2 of 30 deals in 30 days. I hope you guys had some takeaways and enjoyed this. We've got several more submissions in the group. But by the way, if you join the challenge, you'll be able to download our app. You get access to my course for 30 days. You get access to my AI underwriting tools and a chat with me. So you're able to drop stuff in there. I am reading that chat. I'm responding to everybody. If you have deals in your market, if you have a certain market or a certain deal type or a certain type of whatever that you would like for me to take a look at, join the challenge, submit it in the chat, and we'll pull it up. And hopefully you can jump in and underwrite this with me. Robert's saying, yeah, I wouldn't buy this either. It's probably a good choice, Robert. Guys, cheers. Enjoy the rest of your night. I'm going back to the party at Salt Ranch. I'll see you guys for day 3 of 30 deals in 30 days tomorrow. This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more.